Yo, what's going on? I just wanted to get on here real quick and show you guys exactly how you guys could have top ticked today's exact high of day, right? And you could have wrote it down the entire way down, but if you're looking for those meticulous precision entries, this is what this video is for. This is just to show you guys that this isn't just like random. It's not guessing, it's not chasing, it's just pure precision. And no gatekeeping this video. This is one of the foundations to Kez's Wick theory. So if you guys are curious, you always want to go on your daily time frame and already have this kind of marked out, but you want to be taking out the OTEs of every single wick, because every single wick in price is what? It's a gap in price. And this is the foundation to Kez's Wick theory. What do we soup to the T? Here are my settings for the OTE. You guys can have those. And I'll just switch it to the 50, but right here, you always want to take out this wick high, low to the close, and then same thing, this wick right here too. So every single day your chart should look something like this, right? We're gonna keep these levels on here, but what do? We trade into fair pricing, and then we significantly move lower because price is free. Think of it like this. There's two programs that we're in. We're either in buy programs where price is making higher highs. There's sell programs where we're making lower lows and lower highs, right? And we're shifting from a buy program to a sell program, right? So think of it like this. Price is on a leash. Price is not free to move lower until we give what? Fair pricing. So you could have caught this move up because price was unfair until we hit this level. And then you see we soup it to the T. This happens in price time and time again. Always want to keep out these levels on the time frames that you're trading on. And then I'm going to show you guys a little bit more sauce on protected highs and my exact trade that I caught, by the way. Sent in the Discord. I was in the call. And yeah. So let me delete the lower half of this wick, even though you guys can see this retracement. This was at 10 a.m. I kind of just want to show you guys the significance of these levels of every single day's previous daily wicks, right? Just these key levels right here. You guys can have the quadrants, but I just like the three, like the 0, the 1, and the 0.5. That's really all you need, but you'll see we just soup this low before going lower. And this is the lower half of the daily wick. See the daily low, or the lower half of this wick? It's just a part of Kez's Wick theory in a sense, right? I'm just showing you guys a little bit more foundation on sort of how to build narrative, because Kez's Wick theory is just a meticulous way to get your precision entries. And I'm going to show you guys exactly on the lower time frame as well. But some more narrative. What do we trade into? You guys see all this chop, chop, chop. It's pre-market. Yeah, we'll save that for another video. I was just going to show you guys midnight open. Actually, why not? Let's give a lot of sauce out this video, right? What do we have right here? What time do we open up, right? This is your midnight open. What do? We trade above your midnight open. What is this entire leg right here? This is your Judas. This is your manipulation leg. The manipulation was already offered. So there's no reason for us to come back and test here, right? In your standard deviations. Now, if this stuff sounds like gibberish or you guys have no idea what I'm talking about, I'd highly recommend joining the Discord. And there's a lot of free nuggets, a lot of free sauce in there. It's a free community to be in the Discord. And I also do offer my mentorship, Met for More University. And that's kind of the whole reason why I made it, is because whenever I first started, genuinely, I was just a kid with a delusion, with a vision, and nobody else saw that vision that I had, right? So just to be able to fast track people's profitability, it's huge. It really is. Just surround yourself by ambitious thinkers. I go live in the calls every single day, live trading with my students, Q&As every single Sunday, and the edge it's there, it's given to you guys, right? So yeah, that's kind of the reason why I created Met for More University, is to fast track your profitability. And if you guys are already in it, take advantage of it genuinely, because there's a lot of people in it that are just MIA, they're missing in action. But yeah, that's only for serious inquiries. So if you guys are actually serious about day trading and you guys actually want to have a strat, like actually have precision and meticulously top and bottom tick, that's where I'd recommend my mentorship. Other than that, the free Discord, there's a lot of free nuggets, free sauce in there. But yeah, you guys can see right here, what do we soup? 2 to 2.5. Boom, straight to the fourth deviation. Again, random. You guys let me know. But my exact trade that I caught today was right here. So let me get rid of all these levels because it's kind of making it really hard to see the actual charts. Okay, so we had an SMT divergence right here, pre-market. This was we already traded above midnight open, so that was our manipulation leg, as we just went over. So, and let me actually make this more precise. But this right here, where we created an SMT, this is a protected high. Dude, I'm really just dropping pure sauce. If you guys are not taking notes, by the way, I'd highly recommend doing so. But this right here is a protected high. And this wick is what? It's super duper protected. So there's no reason for us to trade through this high. So if you guys already know this, what do you guys think is gonna happen with this order block, with the CSID right here? With this order block supported with what? This fair value gap, right? We're obviously gonna respect it because we have a protected high. We closed bearish. We trade back into what? Combination of two pity arrays, super duper strong confluence, and then we just tank lower. And then what do we create? So we already have supported price moves. We have SMT supported by this high. We're respecting this bearish order block, change state and delivery, and then we're respecting what? This fair value gap, right? So what do? We wait until the macro times, because I always wait. I'm always meticulous with my entries, right? So this right here, we have a M15 fair value gap, right? So you want to mark that out. Go down to, let's check the 5 minute real quick. This wick right here. And then on the M1, what do we have? You guys already know what Kez's wick theory is, right? It's a 3 consecutive wicks. What do we have here? 1 wick, 2 wick, 3 wick. What pity array is this right here? Very important 15-minute fair value gap. And I could drag this out. This right here is Kez's wick theory. 2 consecutive wicks, or fair value gaps, by the way. I'll show you guys my exact entry. It was on this fair value gap right here, which stops at consequent encroachment. Didn't catch the high of day from the previous day's EQ of that wick. You guys could have used Kez's wick theory, which, what do we soup right here? Do you guys see this OTE level? We trade into the discount of this wick. Again, how do we build narrative? Like, if you guys are not watching back these videos, look at the time frames, and then look how we were supporting bearish order flow, and look at the times, right? From the just price delivery continuum theory inside of it itself to Kez's wick theory, right? This probably sounds like crazy language to you guys, or just gibberish, but it's not that hard. It's not that hard to understand. But right here, what do we soup? And then look at the timing as well. 9:50 to 10:10. What do we soup? The trade could have been along the lines of, and this was the highest probability setup during the New York AM session, right? Because for Kez's wick theory, ideally you always want the discount of the wick to be given, because then price is fair. Because this right here, it's still filled it. It's still filled in Kez's wick theory right here. But what are you anticipating? Speed. Every single time there's a breakaway gap, that gap is going to get filled. However, you're like anticipating speed, but it's still not the highest probability setup, because price will, during the right time, spool back up in there, give that discount pricing, and now price is free to continue lower. And that's the whole thing. You guys want to see the retracement like this. These legs all right here are retracement legs. Every single retracement leg is the manipulation leg in the sell program. So knowing that information, standard deviation. What do you guys think is going to happen? Most likely going to hit this 4th deviation, right? But I personally always target low-hanging fruit. So this would have been my first take profit. Second take profit would have been a 2. And the 2 to 2.5. Now, if you guys don't believe this, you guys can look at the charts for it yourself, right? Do you guys see how I put together the whole picture, like in a nutshell? It's not just, oh, I'm on the M1. Oh, there's a wick. I'm going to enter off of it. And this is a little bit of insight to the bigger picture of what goes on behind the scenes, right? If you think it's random, you guys let me know, right? If this is really random with the entire structure that we put together, You guys let me know. But yeah, that's kind of it for me today. I gave a lot of free sauce. I gave a lot of gems. If you guys wouldn't mind subscribing, joining the Discord, you guys know what to do. But other than that, I'll catch you guys in the next one. Keep top ticking and bottom ticking these markets. Peace.